If you find yourself continually at break even as a trader, or perhaps through the month you make some good profit and you hand it all back to the markets and you end up at that break even level or into a small loss by the end of the month, and when you're looking at what you're doing, you just can't figure out what is going wrong. If this is happening to you over and over again, one of the main culprits is that you are trying to do too much at once. You are spreading yourself too thin when you're trading. To visualize it in a different way, think about the cockpit of a plane. So I'm sure you've all seen those cockpits. There are buttons and dials absolutely everywhere. Now you are the pilot and you are trying to watch all of these buttons and all of these dials at once. But you don't have the computer systems that the pilots have to help them maintain the systems and to only alert them when something really major is happening. Instead, you're trying to do it all by yourself. And what happens? You start making mistakes. You start pressing the wrong buttons. You start getting into trades at the wrong time. You start mismanaging your trade. Now, what do I mean by spreading yourself too thin? There's a couple of different things. The first one might just be that you are looking at too many markets. You've got 10 to 15 charts open on your computer, and you're trying to look for your setups on all of them at once. It might just be that maybe you're focusing on a smaller number of markets, but you're looking for too many things on that market. When the market comes to your support and resistance, there's maybe 10 to 15 different kind of setups that you want to take. What you're actually doing is you are allowing yourself to get into the market when the perfect setup isn't there. And you're doing that through frustration. You're doing that because you think you need to be trading actively and you need to be trading often if you want to build your trading account. And what's actually happening is it's holding you back. If there is one thing that I can get across to you in this video, it is that most likely, if you are going through this issue, it's because you are trying to do too many things at once. You need to refine what it is that you're looking for. You need to find just one or two things that you can repeatedly and reliably identify that's going to leave you profitable overall. You shouldn't be looking for 10 to 15 different setups because all you're doing is allowing yourself to make mistakes. You're making it more likely that you're going to make mistakes. You're that pilot in the cockpit of that plane with all of these buttons and dials, and you're trying to manage them all at once. And you're trying to do it without any mistakes, so that by the end of the month, the plane is still in the air and you've not managed to crash the plane. So what can you do? Well, I talked about this in the last video a little bit. It's the exact same thing that I'm going to sort of advise my students to do when they have a little bit of time off at Christmas. You can do it relatively easily. All you need to do is look at your trading setups. Go back over your historical data of what you have been looking at. And instead of looking for all of these different setups and trying to trade them all at once, and instead making mistakes and making it incredibly difficult for yourself, you look to refine it. You look to pick out the really, really good setups, rather than just taking every pin bar that you see at support and resistance and hoping it's going to leave you profitable overall. Even worse, when you've been doing backtesting, maybe you've looked at all these different setups and you've added up all the profits and you've said to yourself, okay, if I trade all of these setups, I'm going to be up by X amount per month. But it's not realistic when you're actually trading, because when you've been backtesting, you've most likely been testing overnight when you're not going to be sitting at the computer. You've most likely backtested on multiple markets, which you're not going to be able to trade at the same time. You're not going to be able to have 10 to 15 perfect trades running on all of these markets. And so what you're actually doing is allowing yourself to take lots of trades, but in reality, you're holding yourself back. Now, when you see setups also, if there's 10 to 15 setups and you've got 5 or 6 markets, when 2 or 3 line up at once, you then have to decide, well, which one's the best? Which one in the probabilities is going to help me get towards profitability? It's a fool's game. All that's going to happen is you're going to keep ending up back at square one. So what can you do? You can go back over your historical data and you can backtest and you can refine what it is you're looking for. You can understand that the only people who trade multiple instruments, multiple different setups every day are people who are using some sort of automated system. People who take multiple trades per day are usually using some sort of high frequency trading. And if you're going to be using high frequency trading, you're going to need an absolutely enormous trading account, because you're going to have to take multiple trades at once, and also you're going to have to find the edge in the market where the banks are already looking. And the banks are putting in huge amounts of money, which you just don't have. So in reality, what we're doing is we're just trying to find one or two setups that we can do over and over again. We're trying to make it as boring as possible, where we just sit on our hands, we just watch the charts, and we just wait for that perfect setup to come along. So how do you take all of this stuff that you've got and refine it down into a couple of really good setups? Well, the first thing is, if you are looking at 10, 15, 20 markets, chop at least half. Now, if you're trading the daily time frame, maybe that's a little bit different. But for most of us, if you're looking at multiple markets, you can quite easily chop the number in half, and it's not really going to impact you a great deal. What it's going to do instead is mean that you can focus on the markets that are left in a lot more detail. You're not spreading yourself too thin. What else can you do? You can look at your setups and you can start to add the confluences together for certain setups and refine it down to only one or two really good entries on the market. You can look at what exactly you're looking for. So something would be, if you're just trading off of support and resistance, rather than just taking any signal candle, you could look and you could say, okay, what happens if I get a price squeeze at these levels? Is that something I can identify repeatedly? Is it something that's higher probability than just taking those random entries? You can say, are there double tops and double bottoms? There's a video on double tops and double bottoms in one of the playlists on the channel. I think it's called Pattern Trader Playlist or something like that. It's going to show you exactly what I look for with double tops and double bottoms. Does that leave you with higher probability trades? Does it stop you having to look at this entire cockpit of buttons and dials? Meaning that you can instead focus on only taking the perfect setups. You can look at the double tops and double bottoms, and you can start to refine it even further. Okay, double tops and double bottoms. What happens if the second touch on that double top is more bearish? What happens if the double touch or the second touch on the double bottom is more bullish? Does that leave me with a higher probability setup? So price squeezes, double tops, double bottoms. You can even look for areas where the market just ranges sideways and squeezes into almost what looks like a rectangle. And then you look for your signal candle at your level of support and resistance breaking out of that level. Does that leave you with a higher probability setup? If you start to do that, and if you start to refine what it is you're looking for, you're going to give yourself a much better chance of ending up as a profitable trader at the end of the month. You can't focus on every market. You can't focus on multiple different setups at once. 2 or 3 is absolutely perfect. And yes, you have to sit and you have to wait for those setups to show up. What do you think professional traders who are risking huge amounts of money, I'm talking about guys that I can't even dream about being at their level, they've got millions of pounds in their trading account. Do you think they are looking at 20 different markets, and then on those 20 markets they're looking at 20 different potential setups? Or perhaps they've got really weak setups that they just trade over and over again, randomly. Because when they back tested it over a 3-year period, trading 24 hours a day, it left them profitable. Of course they don't do that. They want to protect their capital, and they only want to risk it when they know they've got a really good chance of building their trading account. And that's exactly how you need to approach trading. Even if you have a small trading account, it doesn't matter. These are the habits that are going to help you build the trading account and then become the person with a larger trading account who can call themselves a professional full-time trader, if that's what you want. Maybe you just want to build your savings. Whatever it is, it doesn't matter. You can't approach it as a beginner thinking, I'm going to do it differently. I'm going to trade a lot more because I've got a small account and I want to build it faster. If that worked, the professionals would be doing it. It doesn't work. Unless you've got some black box automated system that can manage these multiple markets for you and leave you successful over time, and you're doing it instead manually, you have to understand, we are not supercomputers. We make mistakes, we get tired, we get frustrated, we get bored. In trades we mismanage sometimes. If you have so many different things that you're looking at, it's a lot easier to allow those weaknesses to come forward. So instead, if you refine it down, then when the setup comes along, you know exactly what you're looking for. When you get into the trade, you know it's a high probability setup. It's not just a random setup. So you don't need to start looking at every tick on the market and thinking, what does that mean? Do I need to come out of the trade? Do I need to get my stop to break even? What am I supposed to do? If you refine it down, you know you're in a high probability trade. Maybe you even have your profit targets set. Maybe you look at the market for swing points and you say, okay, when it gets to here, I'm break even. When it gets to here, I'm closing out at 50. When it gets to here, I'm closing out the remainder of the position. And because you're only trading a few setups, it's a lot easier to do it professionally, to do it properly. And it also means that throughout the month, you're not going to go through cycles of having a few wins, getting overconfident, starting to take less perfect trades, and giving it all back again. You're not going to go through the month taking random trades that you don't really understand. You don't really know what to do when you're in the trade, and then wondering why at the end of the month you break even. So as you're doing this, as you're backtesting, it's the exact same thing that I'm going to advise to my students. Have a look back over the markets, look at the areas that we were trading from, and see if you can find things that you can identify that are high probability. All I'm going to do is show them the exact same things I've gone over. Double tops, double bottoms, price squeezes, ranging price action. Also things like overextensions on the market maybe, trading areas where you consider really high probability, and you really want to trade from that level as a buy or as a sell. Are you able to repeatedly identify those? And then refine it down into something that you can do over and over and over again. Allow yourself to have a relatively simple approach. Because if you're doing too many things at once, what's going to happen, as I've just explained, you're going to make mistakes. You're most likely going to end up break even because of that cockpit of buttons and dials that you just can't hope to focus on all at once. So that's my advice, guys. If you are watching this video, hopefully it's because you are looking to improve. Hopefully you're going to take some of that on board. You're going to go away, and as well as eating too much, drinking too much over Christmas, you're going to sit down at the charts, have a little look back over the results that you've had, the annoying months where you just break even, where you're having small losses, and you're going to figure out if you can refine down your trading plan. Don't need to look at this promise of fast cash. You need to look at what works. Not what the people who are showing you the fast cash and the Ferraris and the Lamborghinis are explaining to you. What are the professionals doing? What are they actually doing? When they're making small, consistent gains over and over and over again. When they're bored, senseless, sitting at this computer, waiting for those perfect setups. Because it's not supposed to be exciting. It's a job. It's something you can do repeatedly. And everyone who's doing the same thing over and over again eventually starts to get a little bit bored. I'd rather be bored protecting my account and making money than excited jumping into trades randomly, not knowing what I'm doing, and losing money. It's the only difference. Okay guys, so as always, I hope that was helpful. I hope it helps you to sort of look back at your results and maybe improve what you are doing as a trader. I'm James Orr, and thank you.